Good morning, everyone. I wanted to make another video going over ways you can manage a trade. Um, Hopefully this one won't be as long as the previous video. But these are 7 ways you can manage a trade. There are many more ways you can manage a trade. These are just a few. But the one I went over in the previous video was hold till disappointed. I think this is a very reasonable approach, and I actually use it quite a bit. The next one is quick entry, quick exit. This is good if you don't enjoy waiting for a trade to play out. Static stop loss, trailing stop loss, attaching your stop loss to an indicator if you think possibly you'll have a strong trend day, using the ATR, so just whatever the size of the recent candles are, maybe do like a 1-to-1 of the average size, and then measure moves. This is probably my favorite way to manage a trade. Before I go into the different ways, I kind of wanted to quickly talk over optimum risk. You should never be risking less than 0.5%, and you should never be risking more than 2% of your capital. So whenever you enter into a position, wherever your initial stop loss is, that should determine your position sizing. I have an example here. Let's say you have $5,000 account, a $5,000 account, and you're convinced that the price will go higher based on what you see. You buy the close of a strong bull bar and risk 16.75 points. If you want to risk 2% of your $5,000 account, what should be your sizing? On an E-mini, 1 point is $50, and on the micro E-mini, it's $5 per point. So just quickly looking at this, it's 800 something dollars. So that's not going to work. So 5,000 times 2% would be $100. So you can't risk more than $100. So if I do 16.75 times $5 for 1 point in the micro, it'd be $83. If I do that times 2, it'd be 167. So I can't do 2 micros, I can only do 1 micro. Another example I have here is you have a $75,000 account and you're convinced that the price will go lower based on what you see. You sell the close of a decent bear bar and risk 4 points. If you want to risk 1.25%, what should be your sizing? It's the same math. 75K times 1.25, it gets 937.50 cents. You can't risk more than that. Well, if I do 4 times 50 for 1 mini, it'd be $200. Well, if I do 4 minis, it'd be 800. If I do 5, it'd be 1,000. So obviously I can't do 5. So I can only do 4 mini contracts in this scenario. This is an Excel file of essentially what I was just talking about, but a more visual representation. It's hard to calculate those numbers quickly and efficiently in the middle of a day when you're trading. So this is actually an Excel file that Ali Afshari made that you can have up on another monitor, and you can input your different values here to adjust this accordingly. But it's actually a good way to, it's a good visual to see what your sizing should be. And you don't have to think of too much. This only goes to 6 points, but you could obviously edit it to where it goes on a lot more than that. But it's a very interesting article, and I'll leave the link in the description. I highly recommend reading it. It's very well written. It's important to know, it's important to have an idea in your head of how the trade should play out. This can help determine your management style. It's also really important to find out what you enjoy most, which is more fun for you. Some of these are more profitable than others, but they might not be as fun to you. I know I prefer to use the hold till disappointed and the measured move stop losses. That's like my two favorite ways to manage a trade. They're not necessarily the most profitable, but it's just how I prefer to trade. The hold till disappointed, I went over this in the previous video, but it's pretty self-explanatory. You just hold your trade until you become disappointed. So if you enter short here and there's a strong bear bar, you're happy with that, so you just stay in the trade until you become disappointed. The next one's very strong, so you just stay in the position. Next one's a doji. It's pretty disappointing, but it's still a bear bar, so maybe you hold. And the next one's a bull bar, so maybe you just exit here, and then you capture this move. The quick entry, quick exit. This is good if you don't like holding onto a trade and you just want to take quick scalps. I think this is a good approach. Just no matter what, you always close your position on the next candle or two. So had you entered here, you exit here, you re-enter again, and then exit here. And you keep doing that on like good sell signals or buy signals depending on the context. This approach can get you torn up pretty bad in trading range days, and 62% of the time, the days are in trading ranges. So just be careful trading this method. Um, it's not the most profitable way to manage a trade. Static stop loss, if you notice that you're uh, exiting a trade too quickly and you're not getting back in, then you should have a static stop loss. The only way the quick entry, quick exit method works is if you re-enter again quickly. Um, if you notice that you're exiting the trade too early, just have a static stop loss and a static take profit. In this case, you could have done a measured move of this breakout on the bodies. So from here to here, it lands here. So you just enter in position here, place your stop loss here, and just leave and wait till it either hits your stop loss or your take profit. This is a good way if you're exiting trades too quickly. Trailing stop loss, this is a good way to manage a trade, especially if you have a runner. I sometimes use this if I think the market's going to trend and I don't want to use another trading management style. So sometimes I'll enter into a trade, move my stop loss under the next candle, and then keep doing it until it closes above it, or price moves above, like makes a new high from a previous candle. So had you entered here, your stop loss would have been here. After this close, you would have moved it here. After this close, you would have moved it here, and kept doing it until it would have gotten taken out. This is a good way for runners, in my opinion. So if you're trading multiple contracts, and let's say you scalp in an initial position and leave a runner, this is a good way to manage it. You can attach to an indicator. I know there's traders out there who try to capture really large moves, and their stop loss will be maybe a point or two above the EMA, or vice versa if the trend is up. Had you done it in this case, it wouldn't have been as profitable. But I know this is a way. If you think the day is going to be a very large trend day, let's say you have very strong consecutive bear bars at open. Let's say this bar was very bearish, this one was bearish, this one was bearish, all the way to like here. It's pretty indicative that we'll probably have a decent trend day. So maybe you attach your stop loss to an indicator. I know on NinjaTrader you can attach it. So as it moves, it'll move your stop loss. But this is a way to manage a trade if you think you'll have a strong trend day. ATR, I don't use this approach really that much, to be honest, but essentially, whatever the size of the most recent candles are, it'll calculate it, the average true range. I use a period of 4. In this case, it was 6.5. So had you entered here, stop loss would have been 6.5 points up, and then your take profit would have been 6.5 points down. Just go 1 to 1, and just either let it hit your stop loss or your take profit. This is an okay way to trade. You have to win more than 60% of the time to be profitable doing this, just because it's 1 to 1. So I'd only be using this if the context is really good and you're very confident it will continue in your direction. Measure moves. This is actually my favorite way to manage a trade, and it's not just with trading ranges. I use it in trends as well. If I'm counter trend trading, I'll use measure moves. If I'm doing anything, I really love using measure moves. But it is the best for trading ranges. So in this case, we have a pretty large trading range. We had a trend up and then sideways the rest of the day. You could have seen a wedge bottom here. So 1 attempt, 2 attempts, 3 attempts to go lower, creating a wedge bottom. We tried to push higher and then we came back down. You could have placed a limit order here, hoping to retest the high of the range, and place your stop loss at a measure move of this congested range here. So you could have entered here, had your stop loss here, and then exited at the top of the range. This is my favorite way to manage a trade. This is what I use every day. I'm not necessarily trading exactly like this every day, but I use measure moves of candles or ranges all the time as my stop loss. It's my personal favorite way. I wouldn't consider it the most profitable because I'm not always taking my take profit at the top of a range. Sometimes I'm exiting a lot lower or higher. It just kind of depends. I think this is a really great way to manage a trade. Do what you enjoy most. I always prefer to have fun when I trade. Yes, I could be making more money doing something else, but I just don't enjoy it. And sometimes I'm not good at things. I'm not good at sitting there and waiting for a trade to play out. I kind of want to get some information and then act accordingly. That's why I like the hold till disappointed method. Um, so it's important to find one that you enjoy the most and one that also makes you money, because you do have to make money while trading. Feel free to join my free Discord. There's just a few members in there, but there's a lot of helpful information in there. We talk every day in there. We have a cool chat rooms, flow charts, all that kind of stuff. And I learned my trading from Brooks Trading course from Al Brooks. So if you want to buy a trading course, I'd recommend checking him out. If you have any questions, feel free to ask any questions in the comments. Also post any video ideas you'd like to see. I enjoy making these videos and presentations. So if you have any questions about price action trading and yeah, any questions, I'd love to answer them and possibly make a video about it. Thanks for watching and hope you have a great rest of your day.